First of all, welcome to the three of you. Really good to see each of you. I give a brief introduction, but I'd love to kind of come around to each of you. Maybe just have you kind of introduce yourself to the audience and tell them a bit more about your background and how you've landed here on our panel today. And I'll come to you, Mike. Good to see you.
Hi, Erica. Thanks for the introduction. I'll try not to add too much to that. That other than what you've already said. I am a seasoned M&A lawyer. I've been working in private M&A for 20 years. I started my career in London in the UK in the private equity space, doing MBOs and leverage buyouts and tuck-in acquisitions for very large private equity funds across Western Europe. And so my skill set that I employ within the BC tech ecosystem is one that is very focused on M&A and strategic transactions of that nature. I do have an emerging growth practice, as Erica alluded to as well, which is designed to create a funnel for companies that are either M&A targets or become later stage M&A acquirers through strategic deals and transactions as they grow. And much like Hamad's business has done, we act for companies like that on strategic or rifle shot type acquisitions as they arise. So that's me. I'll stop there.
Great, that's fantastic. And I know we have lots of our startups in the audience. BC Tech has a startups program that's free, BC Tech for Startups. And so I know a lot of our startup founders are really interested in being here, and certainly your skill set is going to be very valuable for the conversation. Pam, lovely to see you again. Tell us a bit about your background and your role at Fort Capital.
Yeah, I'm happy to be a part of this. A partner at Fort Capital and lead the tech practice here with a focus on raising capital and M&A. Similarly, started my career in London and moved to New York after that, scaling tech companies, going through an IPO, acquiring companies, being acquired, all of the chaos along the way that is all of those processes, and passionate about the BC tech ecosystem. So happy to be here.
That's great. And as I said earlier, you've seen all sides of the equation, so it'll be interesting to get your perspective and then some current insights as well. Hamad, over to you.
Thanks, Erica, for having me. So as you noted in your preamble and your introduction, have been around M&A quite a bit. I gather we may have given you an old bio, because the number of transactions is just that has been about 50 acquisitions. And at TO, we probably did a handful, some with Mr. Stevens, their support and help. Great lawyer right there, and advisor, and so yeah, we've done all kinds of interesting venture investments, path to control transactions, big acquisitions, small acquisitions, various different forms of financing to support them. So have a lot to say about the power of M&A to transform a business, and quite fond of it. We hear we started the business, I think I bought our first 6 clinics 5 years and 2 months ago, and really have been very, very active with organic and inorganic growth. And now we're close to 4,000 people between the US and Canada. We'll do close to 700 million in revenue this year. Very profitable with over 100 million in EBITDA with good cash generation. And we're very excited about tech enabling healthcare providers, and so it's unique in that we've been buying tech companies and healthcare companies, and integrating technologies to help them basically deliver better patient outcomes and improve their efficiencies and whatnot. So M&A is a fantastic tool, and I think it's great to be able to talk about it today.
That's great. Thanks for fact checking me. Anytime I say a number, I expect someone to fact check me.
15, 50 doesn't make a difference.
Excellent. Well, to get into today's topic, we're going to kind of discuss here, just kind of to start off with, talk about how mergers and acquisitions can be a part of a company's growth plan, especially thinking if we've got some kind of early stage companies on the line here, what are some of those key benefits that come from an M&A strategy for growth? And I'll come maybe Cam to you first on this question.
Yeah, sure. Ahmed, first of all, those are huge numbers. Congrats. It's amazing to see well grow is, even though it seems like you're always, it's always in the news, it's actually amazing to hear that updated number, because it's so hard to do. So talking about, when I think about the key benefits, I think of time, first of all. And, when you're scaling, whether you're public or private, time to enter new markets, time to build new tech, time to find key talent, or get new logos and customers. There's strategies for all of those independently, but done right, M&A can really give you a jump start in all of those areas. They come with the requisite downsides that we can touch on probably later, but I really think of time as when done right, can really benefit you most. I'm happy to go into all of those, but that's for me number one.
All right, time. Ahmed, what are your thoughts on key benefits?
Yeah, I think Cam said it really well. It's transformational, right? I mean, it depends on what your strategy. It's a big tool. So what do you need? Do you need more profitability? Do you need a better balance sheet? Sometimes you can even, attract a better balance sheet. If you can support a certain profile, if you can attract the right technology, the right kind of people, if it helps complete your profile a little better in terms of, how you line up against your competition. So I would just say it's an absolutely, transformational, tool. And you see bigger companies use this tool quite effectively. I mean, can we imagine Facebook without Instagram right now? Can we imagine, Google without, Android or YouTube or most of the amazing things that we see out there, Microsoft Office, this has all happened through capital allocation. It's happened, primarily through organizations thinking thoughtfully about what they need to do and putting their capital to use. So I think it's something that we probably, take for granted a little bit in terms of how our world is constructed around us.
That's great. Yeah. Michael, your thoughts? Are there some key benefits that you see? I mean, there are so many and from different angles.
Sure.
But
for sure, I'll take elements of what Cam and Hamid already mentioned. Obviously the key benefits do differ, and Hamid, you alluded to, the sizing differential between the parties looking to grow and scale through acquisition. Of course, at the earlier stage, I mean, we are seeing more and more growth through acquisition. Hamid, you feel a bit of a pioneer in BC in this arena, but I'm starting to see a lot of people trying to follow your pattern. At the earlier stage, key advantages are, like you say, access to talent that we don't have. That's something that I see a lot in my day-to-day with my clients in BC. It's just talent pools that don't currently exist within our ecosystem, although it's a work in progress, right, Erica? We're working on that, but that provides people an opportunity, the key to unlock a lot of value that resides in the business model, the ideas, and it allows them to deploy the precious capital that they've managed to raise or earn up to that point in a much more efficient and strategic way. And then as you go further down the growth curve to the larger companies, like a well, you're looking at the buy versus build conversation, right? So does a large company innovate well? Maybe not. Maybe you are really good and you do have great people and you're able to have a foundry model within a larger company, but that can be somewhat rare. So, the buy versus build model is something that's a little bit more present in the larger companies, or the companies that are at least further along the growth scale. The other aspect that hasn't been mentioned, and something that Hamid has done to a really successful degree over the 10 years that I've known him and worked with him, is utilizing shares, equity, as your consideration for the acquisitions, right? So whether it's talent or assets or an entire business, using, the currency you use is your equity rather than your cash, right? I mean, that's a pretty obvious point, but it creates a different kind of sort of value to the opportunity, and it allows a company in a growth mode to not only acquire and create synergies internally and to scale, but also retain capital on the balance sheet, working capital on the balance sheet, in order to effectively realize on that strategic opportunity, with, a healthy working capital and enough money that you can spend to roll that out properly.
That's great. I'll maybe pause, Cam, comment. I don't know if you wanted to kind of jump back in on any of that.
I think what Michael just said is really, really important because you'll get into situations where you want to buy a company and they're not sure if they want to be bought because their journey's not over. And they may say, look, like you're going to create, this is going to be great for your story. Your stock is going to do a lot better. And we don't want to end our journey. We don't want to cash our chips in. And when you buy them with shares, they can continue their journey. This is a very, very important, way to overcome an objection. And in fact, this, we've all heard this kind of old adage, 1 and 1 is greater than, if 1 and 1 is greater than 2, then you got something here. Well, sometimes it is. And if someone receives consideration in shares for that acquisition, that does create, accretion beyond the mere addition of those businesses, then both can participate in that accretion per share, which I think is really something that's I think a phenomenal way to be thinking about M&A is, how do I not just do something good for my own business, but how do I attract someone who also I'm going to enhance from a shareholder value perspective?
That's great. Truly a win-win. Cam, any thoughts on that?
No, I think they summed it up really well. I'm taking notes. I'm learning.
Well, and you kind of alluded to this earlier, but there are some downsides, some risks to consider as well. And so I'm curious, from the three of you, what are some of those, and if you're a tech founder, you're thinking about an acquisition, what are some of the downsides or risks that you might need to consider? And I'll come maybe back to you, Mike, if you don't mind first on this one in terms of risks or downsides.
Sure. And I'll let, there's a few here that, pop to mind immediately. And the big one is something that I'll preview and let Hamed elaborate on if he gets a chance to speak on this one. It's really the meshing the two cultural fits, which is something that Hamed and his team of M&A professionals have been excellent at, but that also has a fair degree of risk to it. So I'll focus on the other stuff, which is a lot more legal. Obviously sometimes deals go bad, right? First of all, professional fees, if you grow organically, there's fees along the way, right? You might want to enter new jurisdictions in which maybe your product, a la TO Networks, is regulated, right? And so if you're entering a new jurisdiction, maybe organic growth is expensive too, but when you're growing through acquisition, scaling through acquisition, professional fees can add up, right? Every acquisition is going to require a fair degree of tax analysis. Every acquisition is going to require a lawyer to be, familiar in the territory and familiar with your business, and spend a lot of time with the management team understanding the business, the growth path, and the objectives. And that costs money, and it can be quite expensive unless you work with a firm that does it for you all the time, and it is sort of understands the process a bit better, right? Because those costs can add up. There's insurance issues if you want to have the deal, effectively the purchase agreement insured, which sometimes you'd want that. So it's really just, from my perspective, just a deal risk. I'll add, there's uncertainty also at the time of the acquisition. And Hamed, you'll remember this on the TO side, we had to be really careful about not unsettling the existing employees, nor unsettling the employees of the target company or the team around the asset that you're acquiring, or just the team that you might be acquiring in an acqui-hire, right? You might not need the assets, you might just want the team. All of those things are very unsettling times to people on both sides of that equation. And it's often gets forgotten, or at least not a lot of attention gets paid to it. And part of a successful strategy and implementation of that strategy is making sure that you take care of the people, right? Because if you don't, a lot of technology businesses, well, I don't want to, I'll let you talk about this part, Hamid, but it's a key aspect, is just making sure that you're being careful around the communication throughout every part of that process, from the LOI being signed to the new packages being negotiated to the equity compensation being plotted out, and like Hamid said earlier, people rolling into the new equity, what does that look like? What's the story behind all that? What kind of rationalization will there be? And then the last thing I'll say, just the reps and warranties. Those are the contractual promises in the actual purchase agreement. If you're getting those promises about the state of the assets or the business that you're acquiring, and they end up being not true in a material way, you end up with a really sticky situation where you might have to sue the CEO of the new division you just acquired. Of course, those things happen in 0.0001% of the time, but it does mean that you have to be very thoughtful in the process of actually acquiring the business. It can't just be big law firm comes in and drops a terrible piece of paper on top of the exiting CEO and they just have to sign anything, right? Sign their lives away. So you got to be thoughtful about it. There's a lot more humanity behind buying these types of businesses for these types of reasons, I think. Anyways, those are the risks.
I think you've really set up Hamid here to figure out that's the secret sauce, but putting people first, like what have you learned? What's your approach?
Yeah, no, Michael gave me a few softballs there. So let me work my way through them. He's 100% right. Culture is the first thing that came to my mind when you brought this question up. Even if the numbers look good, even if the technologies look like they're going to mesh well, companies can literally, get torn at the seams if you're bringing, cultures that are at odds with one another. And it could be very different styles. It could be just the way, how direct they are, how unfiltered they are, how they manage performance, these things, if they're remarkably different and you go from sometimes like a harmonious situation to a very cacophonous situation, and you're no longer producing great music. And I think that's a really big key. And yeah, I mean, a lot of this comes back to, as Michael said, the humanity of this. We are people at the end of the day. And so if you buy a bunch of people and you think, boy, these are assholes, sorry for, saying,
I'll beep it out later.
Everyone most people I know have a no asshole rule. Everyone should have a no asshole rule. That hurts the fabric of your company. Even if someone's a great producer. And what if you just dropped millions of dollars and you realize you've got, one of those people on board? Are you going to let them go? You just paid all this money. So being also, I think, appropriately skeptical about why they're selling the business. It comes back to what Michael was saying earlier, like reps and warranties, are there any hidden liabilities? Are there things that are occurring that you don't know about? And people like Michael can help you. You use the documentation and the contract to kind of, try to help surface some of those things and protect the company. But, you also have to do your business due diligence. You have to also be thinking, someone like Michael can't help you with everything. There could be industry related things that, some big regulatory change that's just right around the corner. Right. So you have to really think about yourself, why is this person entering into this? If it's private equity, that's sort of their thing. But, they also, are on both sides of transactions a lot, and they have very different, objectives. So I think that's really key. And yeah, I remember that transaction Michael was talking about where we were acquiring a business and the value was in the people. And this was a 1 and 1 equals more than 2 situation. And you look, these are multi-month processes. So what Michael's talking about is really important. Like, this is not over in a week or two. These things could go on for months and months, especially if you have shareholder approval. In our case at TIO, we had money transmitter license approvals, which, gosh, those things could take 5, 6, 7, 8, 9 months before you actually could close the deal. It was incredibly painful to try, because of regulatory reasons, to actually close a deal involving these types of licenses and whatnot. So a lot can happen during that period of time. So you have these incredible, kind of maintenance covenants. I'll just call them, in the contract, in terms of like, we won't own your company for a while, but until then, how are you promising to run the company? So it can get very, very complex, and having someone as skilled as Michael can be extremely helpful, as you're going through those complexities. But yeah, I think it comes back to the humanity of this. Ultimately in tech, there's so much of these processes and systems are run by people, and they have very specific knowledge. So you want to make sure that you don't, you can destroy a lot of value with M&A. Unfortunately, you can incinerate a lot of cash. I'm sure we've all seen those examples. So, it's very good to do your homework and have great advisors.
Yeah, and really take your time with it. Cam, what are your thoughts on some of the downsides or risks you've seen?
Well, tough to follow these two. I was thinking about the last episode of Succession. Anyone watch it? As a perfect analogy of what can happen through a process in terms of cultures. Great, looks great on paper. Get everybody in a room and hear about the actual intent of what these parts make up going forward, and unmet expectations can implode a deal. And so I think it speaks to the culture and the everything that both brought up already. So first of all, culture for sure. Having been through it both ways, it can be an exhausting process for both sides, and an emotional process where with lots of highs and lows that can get people really unhappy, and that by the time the deal is done, you're in a tough place sometimes. Even just out of the gate. So the cultural, the exhaustion and time again can be a factor there. Unmet expectations on both sides. I think the trickiest part from my experience is sort of the 12 months after, where you have a whole nother level of maybe VPs, different comp structures, different expectations that make coming together really exciting for some, and then a really deflating experience for others who don't feel nearly as fired up about this new merged entity. Things like technical debt, in tech, you can have marketplaces which on paper look really complementary, and then you get into it, and you see this in a lot of sectors over the last 3 or 4 years that rapidly went into digital transformation. The reality of trying to create single sign-on or deal with APIs or little things which you could get to can mean that this great complementary new entity can be delayed 3 or 4 years while you scrap the tech you bought, and the people that came with it are really uninspired and leave, and it can go south quickly. So there's lots of potential downsides that I think you need to be mindful of. But first of all, it is making sure that the great team you have that put you in an opportunity to make these acquisitions is still as fired up, and you don't lose your own team along the way as well.
Well, maybe I'll stay with you, Cam, for a moment, and just get your thoughts, Stephen, or sorry, Mike, you touched on this a second ago, just on kind of organic growth versus growth through acquisition. But what are your thoughts, or can you contrast for me, for some of the folks on the line, what are some of the differences between growth through acquisition, organic growth? When is it better to take one path versus another? And just kind of give us a bit of your thoughts there.
Sure. Organic being sort of what you're doing internally as you're growing your business. And inorganic typically people would assume would be through acquisition and adding revenue and people and another entity. I don't know if there's anything prescriptive on when the right time is, but I think it's important. Like, these conversations are great to understand the factors that are at play, because I think sometimes when you see, you're in my experience, you're competing with someone, all of a sudden you hear that perhaps they'd be interested in an exit, and it's very easy to get competitive and super excited about, the logos they have, the market share that they represent, and what could this combined entity do. And some of that enthusiasm can cloud you to the realities of what integration looks like, and how much time it takes, and do you have the talent to really do it? And is that your talent, your one person in talent and in HR really able to take on the huge task of soothing a lot of ruffled egos and expectations and bring these two worlds together and build a culture that's really going to represent what that market share is. And, you learn a lot through the process, and I do it with clients now sort of every day. And I always come back to the thing that's always tripped me up in scaling tech companies is the human and operation side of things. And I think it's really key to keep that in mind.
Thanks. Hamed, I might ask you a kind of a variation of this question, just because time came up quite a few times earlier. I can imagine a lot of your time must go, towards the kind of acquisitions time. Like what's that reality look like? How much of your time do you have to dedicate to that versus, the rest of your job? And how do you make the decision of kind of balancing that? So if you're a founder today, it's organic growth, like how do you make that switch maybe? And if you could share any of your insights.
Yeah, no, I think you're right. That when you've made M&A a priority in your organization, it does take your time in different ways, I'll say. And for one way, of course, is sourcing, engaging, and essentially, pursuing, targets, we call them. There we've built out, for example, there was a time when I did that myself when we started the company, and I was the lone corp dev guy. And now we have, 4 dedicated, outside of myself, 4 dedicated corporate development people that do nothing but go out there and engage. And then we have an entire due diligence team. When you kind of put it all together, we're probably a 20+ person, corp dev and DD team that works on these things. And so, from my direct energy's gone from, maybe I'll still do some sourcing and activation of opportunities, but I'll be more kind of helping set strategy and following up and kind of working through the negotiations with the various different corp dev folks. And I'll say the other thing is, it's not just about sourcing and getting deals done. It's, that's when the real work begins. It's in integration. It's in that meshing of cultures. And this is where my time really comes in. It's how do you take a multidisciplinary, multicultural organization and really try to bring that together and create that alignment. And that's something that, the key operators of a business are very much charged to do, because they're the keepers and holders of the culture of the business. And so, that's true whether or not you do M&A, but I think when you are bringing different cultures into a business, it's your job becomes a little more challenging and a little more varied. And so I'm always thinking about, how do I bring online, the different aspects of the company, different offices. We have, several different offices all over North America. We have some operations in Australia and New Zealand. We're going to start to have some exposure to Europe soon. So, it's going to be hard to have everyone on the line. We have to record our presentations. We have to be strategic about how we present them. But I think, culture is incredibly important, and everything that you do is really a product of culture. So yeah, I would say that's probably the biggest part is really just the integration, the effects of bringing all this together. That's probably where the biggest amount of my time goes, and it's heavily influenced by the decisions we've made in M&A.
Hey, Hamed, I have a question for you. Sorry, Eric, I was just over the course of the last 4 or 5 years, as the pace of your acquisitions has picked up, is there a function within that corp dev / integration team that you've sort of evolved and has been key to your ability to onboard? So if you had a time machine and you went back and said, I'm going to have this, I'm going to be more mindful of these types of functions, or this, how the integration goes, has it changed as you've got more sophisticated on this capital allocation program, or is it relatively similar?
Yeah, it's a really, really good question. I think it's become more sensitive to culture, more sensitive to, like, when you're very early stage, it's like highly desirable to get this deal done.
Yeah.
and you're just like, boy, this would be really great for us. And we think back to some of those deals that were highly desirable, and we think now some of them were less desirable. because of some of the, people challenges that they brought into the business. Now, we always had, a threshold of pain that culturally that we sort of exercised on, but now it's like a team sport, right?
Yeah.
So, so I think what we do is something that I noticed Southwest Airlines does. When you, rumor is if you're being interviewed for Southwest Airlines, you gotta fly to Lubbock, Texas, and if you fly to Lubbock, Texas, you have to go through Southwest effectively to get there most of the time. And unbeknownst to you, on your boarding card, you are identified as a candidate to go see Southwest Airlines. And so everyone is monitoring you. And by the time you get there, there's a report on you sitting on the recruiter's desk already. And so, and everyone's sort of, and before you even say anything, they know if you've been, nice to all the different people that you've sort of met in the plane, and then the check-in counter, and so on and so forth. And I think we care. And we're constantly canvassing and collecting data and information and trying to integrate that information. That's really the key. And we're talking all the time about these targets. And like someone will say, I had a really bad experience with this person today. Like they were just so rude to me, and like they haven't uploaded their information, and just like, and because these processes can be long over time, once you get through the process, sometimes you've learned so much, and you just can't wait to get the deal done. And sometimes you're just like, wow, this is like, I'm not sure we want to do this deal anymore. And Michael, I'm sure will tell you about tons of these things that have just died on the vine before happening. And I think that's something that we get better at. And there's this sunk cost fallacy of like, well, look, we've spent all this time and money, we might as well complete it. But you have no idea the damage it'll cause if you do a bad deal. So it's better to sink that cost and get on with your life.
Well said.
Better to cut the losses and go. And that's okay. If you have all those signs and you've got some flags, better to leave it. Mike, I'll come over to you on this question. So we were kind of comparing contracting.
I don't have a ton to add. I think a theme running through both of what Cam and Hamid were just speaking about is really preparedness, and that doesn't really distinguish growth M&A from organic growth. It doesn't, but the different types of preparedness Hamid's alluded to, which is really just like preparing the company culturally for the deal, right? And laying the groundwork, super important. Again, it would happen on an organic growth. I'll give you an example. Recently, we had a client that has primarily Canadian employees and European employees decided to drop a subsidiary in the US and hire a bunch of US folks, not through acquisition, but through the sort of a hiring process. And it was really fascinating watching them contort themselves and react to different things that they were not aware were coming down the pipeline to them. Things like, culture, right? I mean, now you have a bunch of highly paid, highly skilled, highly educated Americans who are, lovely people, and we adore them, but, they have a different outlook on life and what they want out of it and what they want out of their employer, right? And now it's a Canadian company that effectively employs them. Things like they didn't really look into, the nil or the de minimis strike price stock options that we love up here in Canada as CCPCs. The US people were like, wow, you just gave me an enormous tax headache. Thank you for the non-ISO stock option. Like little things like that they just they didn't prepare for. And I sort of said, hey guys, like I can help you walk through what dropping a sub looks like and maybe getting some I's dotted and T's crossed. And they're like, we've got this. We've grown organically in Europe. And I thought, okay, great. That's amazing. Go do that. And they came back and said, wow, we just hired 50 US people. We don't have a US HR rep. We're in serious trouble. Help. So, so that's an interesting one. Like, I think people, when they grow organically, think it's part of like, just the cost of doing business, and we'll kind of muddle through. And that's, the minimum viable kind of compliance model of most startups, but a little bit of planning and a little bit of pattern recognition goes a long way. On the M&A side, you can't afford to not plan. You just can't, right? Because you get into situations where, you know, Hamed has alluded to, where you just have to deep six the deal because, you know, the planning, there was a gotcha there or something that somebody didn't look around the corner for, and it's just gonna cost so much more to carve out the cancer than it is to kind of just close the deal. So, you know, I don't really, that's not incremental to what Hamed and Cam said, but, you know, preparedness is really key.
Yeah, some good cautionary tales there. Well, I'm just going to give our audience a heads up. I've got one more question before I'll come to audience Q&A. So if you have any questions, drop them in the chat. We'd love to hear from you. And so, I mean, this has been such an excellent conversation. And certainly, I know when we kind of prepped for the session, we said, wow, we planned for the session a while ago and things have changed. The markets have considerably changed since we first planned for this. So I would love to get some thoughts from the three of you. You know, today's market's very different from the market a year ago. It's going to be different from the market maybe at the close of the year. So what are you seeing in terms of trends from an M&A perspective? And what are some of your predictions for maybe the tail end of the year? And it'd just be helpful kind of to get a now perspective to share with our audience. So Hamed, maybe I'll come to you first here.
Yeah, no, I think it's a great question. Look, I think first of all, when capital markets, you know, go into downdraft mode and bankers don't have as much money to raise, they get, you know, you typically see more M&A activity. And so I think, I think we are seeing a lot of M&A activity right now because, you know, parties decide that they need to be stronger with someone else. Again, it's a transformational tool. Things may not be going as well, especially when you have, you know, the Fed hiking rates and creating various different stressors on different companies. And so I think it gets people also more creative in terms of deal making. You know, like when things aren't super rosy and there isn't, you know, plentiful capital available, people start to think, okay, well, how do we make this deal work? And do we take a vendor take back or is there an earnout? And you know, you just see the zone of possible agreement sort of expands. I think that's something that, you know, we're definitely seeing more M&A activity and behavior. We're seeing sellers be kind of more open and more creative. The other thing, of course, is generative AI, and you know, why that would come into form right now is are there, you know, structural advantages that certain companies would have that would allow them to take advantage of AI? You know, there's a lot of businesses that have been sitting on data for a long time, and you know, they talk about like, oh, we have so much data in our business, and it's kind of like, well, so what? It has been like, so what? But now, so what is actually these large language models can start to activate and help you unlock the value of your data, notwithstanding kind of regulatory privacy and all this kind of stuff that actually obviously has to be resolved. But you're starting to see people think about that value arbitrage, you know, like, hey, I could go out and buy a bunch of these businesses right now that are probably undervaluing their data, and I can help unlock the value of that data because of my sophistication level. So I just think it's a really interesting environment. The last thing I'll just say is that just even building an application now, because of generative AI and all these, you know, the explosion of productivity that's happening out there. I've been hearing things like, you know, that standard $3-4 million, you know, spend on behalf of a VC to get an application to market and try to, you know, achieve, you know, product market acceptance, you know, is now, you know, a lot lower. So I think we live in a perpetual changing time and so forth. And so, yeah, those are all things that kind of on my mind when I think about what's sort of new and people are thinking about.
That's great. And we actually did have a question in the chat about AI, and I think you've touched on it a bit, I think, in terms of even kind of some pressure, right, for companies to be more efficient generally, get there faster. But then I love your point around the data sets and that being like an extra value that companies may not have previously been quantifying. So I'll come over, Cam, to you next on this one. What are you seeing in terms of trends?
Yeah. I mean, I think no question that venture activity and topics that I see within an investment bank have been, valuations are way off, and that's created behaviors both on the buy and sell side, which are unique in this year. M&A activity is way up, and I think what I see in the tech ecosystem with the entrepreneurs I work with, which is, good companies that are stuck sometimes, and I've seen a few companies that raised, they've actually hit their numbers, but the next round, which looked probable, is now looking far more unlikely. And so, to the point around creativity, different structures, different groups. So on the venture side, there's a ton of creativity. In fact, I think a lot of good that's going to come out of this moment in time, that VCs don't just solve all problems, but that there is different groups of capital and different ways to scale the business. Again, M&A being one of them. Probably like everybody, the inbound from private equity is way up too, and there's more creativity there. I'm seeing, PE buyers who are really focused in deep in certain areas that are, for an entrepreneur, I think, if I put myself back when in my own businesses, if someone came to me and said, look, we'll take some money off the table here, stay involved and help us build a monster, that feels really enticing to me and sort of complementary to something that I've built, then merge into my culture. And so I think there's a lot of conversations we're part of right now on M&A. I am mindful of this as being super stressful right now for the tech sector, and good operators who are under the gun to find where this capital is going to come from, and looking at maybe it's better to build this instead of maybe we'll build this within a platform. And so people making big decisions right now, because venture capital is tougher to get and capital is tougher to get, far more open to how can I complement someone else's brand versus just building my own right now. And then on the AI point, I've never seen anything in my career that in like 4 or 5 months has impacted every sector and functions within every sector in ways like this. I mean, it's part of due diligence conversations I'm in right now in terms of how are we going to, how is lead gen going to work going forward? How are we going to enable and onboard, these merged entities? And it is changing a lot in real time.
Yeah. Mike.
Yeah, great. So I'll, again, I don't have much to add that's incremental to what Cam and Hamid have said. What I'm seeing through the haze of sort of creative conversations around how to make M&A work in the current climate is lots and lots and lots of conversations, lots of LOIs going back and forth. The volume is frankly high, but the amount that are actually getting signed, the LOIs that are getting signed is much lower relative to the amount of conversations that are happening, but still higher than was happening 12 to 18 months ago. So I think Cam's right. I think it is a pretty stressful circumstance, but what you are getting in these times, rest assured to all those people wondering, what does this all mean, is that there is opportunity here, and there are people with dry powder out there. PE is a big one, Cam, I think you're bang on, that are being extremely opportunistic, right? So what they're doing is they're taking a look at the toys that they've got in their toy chest. They're looking at their portfolio companies, they're looking at the verticals that they're really deep in, and then they're kind of looking at how do they bolster, how do they scale, how do they grow, how do they mash a bunch of things together and turn it into the greater than the sum of its parts. Sort of that 1 + 1 = more than 2, Hamid, the reference you made. So in a word, we're seeing that it's opportunistic, right? But there's a lot of opportunistic plays. So there, like rifle shot deals, but a lot of guns being fired. I'm also seeing, and again, alluding to Cam's comment about how this is a bit of an uncertain and stressful time, and the VC capital is conservatively being deployed. So tough to come by. It's always been a little tougher to come by in BC and in Canada in general. But It's particularly hard now. I've got a couple of transactions that have signed LOIs where the two businesses are both struggling, but they're part of the same funnel, or they're part of the same platform of products, and they're trying to bundle them together.
Yeah, I'm seeing that too.
Yeah. So, and I don't want to use the word rescue deals, but both CEOs are looking at this as a like, hey, listen, we can make this work. And if we don't, we go down together. Right.
Well, I'm seeing it. And sorry, Eric, I was just going to jump in. I'm seeing it where companies that were able to raise and build a growth platform, if it was sort of grow at all costs, you build your team and you compensate your team accordingly. So there's a lot of companies that had sort of an organization built for growth, product, and then when it came to tightening things up and getting to profitability or getting to cash flow positive, and you need a different composition of your team, that's also been a factor I'm seeing in M&A of like, okay, they've got great customer success, solution consultants, different functions that we're light on, which not just, but maybe help with churn and retention and other functions that are growing, years 2, 3, 4 that we're missing.
Yeah, exactly. That's a really good point that I think would resonate with the audience here, which is that, that there was during COVID companies that were, scaling up for pure growth and growth at the expense of everything else. And now it's a different environment for sure. So yeah, that's it from my perspective. On the AI front, it's kind of interesting. I mean, obviously I come at it, not strictly speaking from the product or the issuer side, but from a lawyer that works with companies that, want better value for money. I mean, without trying to kick all lawyers in the butt, like we are practicing in a similar way that we did 100 years ago. Right. And the practice of law is evolving, and, technology lawyers like myself are more prone to, to welcome in disruptive technology, because it just makes our lives easier, and it drives the cost of us delivering our services down, which means we get more clients, which, I want 100% of 1,000 clients rather than 100% of 2. It makes it better, right? It's for everyone. And so, AI is interesting because, in the M&A sector, especially when you talk about, in the technology sector, specifically, when you talk about, tech M&A, most of the cap tables of people on this call, and Hamid and Cam, you've both seen these cap tables that are complicated and take a lot of time to work through the waterfalls. And what if you add an earnout, as we're seeing a lot, more now these days? And what if there's a holdback? And what if there's performance milestones? And so there's all sorts of things that we're kind of playing with internally to Fasken, and I know other firms are doing as well, which I welcome and I think is fantastic, where you're just trying to get the machine to learn how to draft net working capital statement, or spit out the data. We input the data and it spits out the right formula, and nobody has to sit for 3 days at $800 an hour figuring it out with the management team, right? It's just, let's focus on the important part, which is allocating risk and reward in the contract, and planning for integration issues, right, Ahmed? Like, let's focus on the stuff that's really going to drive value, rather than the stuff that's really going to be accretive to the legal firm that's acting, but isn't really, it can be done in a way that's more efficient. So AI is pretty cool, like document automation. We've only scratched the surface there. Like, it would be great for an extensive, exhaustive term sheet to be able to be turned into an 85% ready share purchase agreement. That would be fantastic, because it would make a lot of companies that are, like we talked about right on the kickoff of this call, like earlier stage, that want to grow and scale through acquisition. It makes that an easier ramp, right? And, if you're not paying 150 grand to the law firm every time you want to buy, 15 staff from a tech company in Boston that's going nowhere, but they've got the brains to come and make you, enhance your sales and therefore your balance sheet. That's prohibitive, right? It makes you stop. And so, automating some of the processes is the way that we see this working, particularly in tech M&A transactions, because I think that is part of the rising tide lifting many boats, which is really like an ecosystem forward perspective. And so, it's TBD really, but the end game is to hopefully automate a lot of the stuff that, Hamid, you and I have had, late nights talking about this sort of stuff, not law, right? Like, math is not law. The drafting of the mathematical equations is law, but math isn't, right? And that should be done in a more efficient way.
Yeah, and I think what it would likely do is it would make us even talk more and draft less, which I think would be great.
Yes,
Because,
totally agree.
that's what I would love to do with someone like you who's got the human AI of having seen so many things. You have such an inherent experience base of just being able to provide wisdom of what you've seen and why certain clauses would be better than others, the pros and cons of taking this approach or that approach. And I think sometimes the pressures of drafting and just getting things done don't allow us to have as many conversations as we would have normally had. And so not saying in your case particularly, I'm just saying in general. But yeah, it'd be cool to talk more strategy, right?
Yeah, exactly. Because that in the end is what is the most valuable to the company. The legal risks associated with acquisitions are actually, they exist, but more and more we're seeing reps and warranties and indemnities being insured, right? So there's still work there, but the likelihood of reps and warranties being used as a price adjustment mechanism retrospectively, it's like 2% of deals. It's less than that. I'm making up numbers, but I've seen it twice in my entire 20-year career. It just doesn't happen.
Yeah. I think you also you learn a lot along the way through these processes about how your new or potential partners solve problems, deal with challenges, are creative. I think there's a lot of interesting cultural due diligence that comes out of this. And sometimes I think a mistake I see founders make is let advisors have some of the tougher conversations or stay out of the room for certain things. And that's kind of when you learn that, really what people are like, good and bad. So I would encourage people, Erica, I'm sure what do you want to take away from a conversation like this is stay in the room sometimes and because the tougher ones, the tougher conversations, you'll learn a lot about what it's going to be like to work together going forward.
I hate to end us because I think we could keep on going for a while, but certainly I hope that everyone enjoyed today's conversation. I think we're at an interesting time. As you said, lots of creativity in the M&A space. At the same time, incredible tools at hand to help companies kind of accelerate their growth.